Thanks for your time today, John. Now, what are the signs investors should look for so they know when they should exit a mining town?
Well, mining towns are a little bit different to other types of investment areas because the majority of properties are rented. And so what you look for, the very first sign that there's trouble is when the rental vacancy rates start to go up. The number of advertised property vacancies, when that rises, that means that something's wrong with that market.
Do you think it's too late or too risky to buy into a mining town, and why?
Well, I think that depends entirely on the type of mineral that's being mined there. At the moment, there are great prospects for many different types of mining areas in Australia where they're mining copper and aluminium or bauxite, uranium, nickel, tin, zinc and so on. All of those minerals, there's strong demand for them, so there's no problems with any of those at all.
So there has been some negative media reports about mining towns at the moment. What would your advice be to investors, and how should they be reacting to those reports?
Well, I think what's been happening over the last 12 months is very much political, and that is that the mining companies are against the mining tax and the carbon tax, and they have decided that for one reason or another they're not going to do any expansion projects, and it's probably in their best interest to jettison the Labor government as soon as they can. And I believe that as soon as that happens after the next election, we'll see a whole lot of expansion projects re-emerge. Expansion at Roxby Downs, for example, the Port Hedland Port, Outer Harbour expansion and so on. All of these things will start to happen because all those taxes will be removed.
So would you still invest in mining towns, and if so, which ones?
Well, I'd very much invest in mining towns of the sort where I thought the mineral demand was expanding and also the local mine had the capacity to produce it. Roxby Downs is a classic example of that. I think that towns like Mount Isa and Cobar, and in particular Weipa up in the north where they're mining bauxite, have great potential.
Do you think though that the risk outweighs the reward?
Well, I think that any investor in a mining town has to realise that at the start of the process it's pretty much all speculation. The investors who moved into, say, Port Hedland in the early 1990s were buying properties for $70,000 which they could have ended up finding were worth nothing after a few years. It didn't work out that way. Prices doubled and doubled again, and so you have to be prepared to take some risk. But at the end of the journey, when you're in a town now like Port Hedland, where there's strong rental demand, it means that there's positive returns for properties, so there's really no risk at all.
And what about population growth? How important is that when it comes to mining towns?
I think that rather than just population growth, I think it's the percentage of people employed in mining that is the important figure there. If you look at Cobar, for example, population growth was zero over the last 5 years, but the percentage of people employed in mining increased dramatically. So that was a key that something was going on.
Anything else investors should know?
Well, I think again it's the location is very important too. You want to invest in areas where there's a captive rental market so that people can't easily drive in and drive out to other towns. Strong demand for the minerals, and then keep an eye on those important figures such as the rental vacancies.
Thanks very much.